Welcome back to the channel, everyone. Today I want to genuinely expose the naked shorts and the synthetic shares, as Suntex on Reddit has done some calculations using the Webull API website data to show that somehow Webull alone holds 40% of the AMC float. That doesn't include Fidelity, that doesn't include TD Ameritrade, doesn't include interactive brokers, doesn't include Robinhood or any other broker. Just Webull alone somehow holds 40% of the float. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Suntex has titled this the naked smoking gun. Firstly, Suntex does a bit of an introduction and explains the preface about APIs, how an API works, and how an API can be used to obtain background data. He then also talks about Webull's position distribution and how this is supposedly calculated, and then how this is really calculated. So the Webull position cost distribution assumes that all free float shares were purchased and held by investors. Based on this assumption, the position cost distribution analyzes the cost prices at which those shares were purchased, how these different price points are distributed at one time and changed on a daily basis. The position cost distribution indicator is a technical indicator that obtains data from the transaction record covering the 13 national exchanges in the US on a daily basis. The transaction record shows the filled prices of all orders executed during a certain time period, typically one business day. It indicates that the cost basis of the circulating shares are moving towards the filled prices. However, we will also say that we do not know which positions of investors were closed using the above data from the 13 national exchanges. But then how can Webull create a position cost distribution showing where investors bought and held those shares in AMC? As Suntex says in this histogram, there's a lot of positions in the $40 range, but there's also positions in the single digit range as well as in the all-time high range at $72. If Webull uses data from exchanges, most probably trades or buy and sell orders to generate this chart, how would they know if single digit positions or all-time high positions were closed? Basically, if they don't know which positions are being closed, then how do they match the open orders and the closed orders and remove positions from the histogram and add new positions? Basically, how do Webull figure out which positions to close? How do Webull know that these shares haven't been sold and the position closed? How do Webull know that these shares haven't been sold and the position closed? Yet they seem to have a very accurate histogram. He says the way Webull states how they obtain and calculate their data makes no sense, but maybe there's a simpler way to calculate the data from the chart. What if they just use the positions from their customers to generate that chart? It'd be very, very easy for Webull to do a search of their database to figure out where their customers bought AMC and plot it on the chart. Guys, if you didn't already know, I personally use BlockFi to invest in cryptocurrency. Not only can you just buy some Bitcoin, but you can also earn interest on your deposits up to 9.5% per year. That interest is also paid in crypto, so you can continue to accumulate more and more and more Bitcoin. If you sign up to BlockFi using my link in the description below and make your first deposit, you can currently get up to $250 in free Bitcoin. BlockFi also offer a rewards credit card with an introductory rate of up to 3.5% cashback on your purchases, also paid in Bitcoin again, so you can just earn even more and more and more Bitcoin. And when you've generated a massive profit in your investment, instead of having to sell off your Bitcoin or your Shiba Inu or your Loopring or whatever crypto it is that you hold and potentially missing out on the next run up, you can take out a crypto backed loan with BlockFi. Therefore, you have some Bitcoin or crypto as collateral and you can take out cash in order to pay down your bills, buy a new car, buy a new house or whatever it may be. He then explains that Webull can be used without a user account. Therefore, some web APIs work without any form of authentication. Everything is visible in the app without being logged in, and it can be obtained via API without that authentication. So he then explains how you can get into the Webull API, how you can get the ticker ID for AMC, or for this example, he uses Apple, and the results look like that. So you can see that he's done a search for Apple, which has given him the ticker ID 913256135. He then explains how he obtains the cost distribution data and how he obtains the total shares and also the distributions, which look something like that. He's then searched that ticker ID in Webulls Web API, and he's found that Webull holds 99,355.67 shares of Apple at $122.65 per share, and then obviously the subsequent distributions above and below that price level. Obviously, Webull can hold 0.67 of a share because they offer that fractional share investing. So he's then multiplied the number of shares held by the share price at each distribution level for the top 10 stocks held on December 6th at Webull. You can see a lot of these stocks in the top 10 are as you'd expect. Tesla, Nvidia, AMD, DWAC is an interesting one, Amazon, Apple, Moderna, Lucid, Facebook, and many more. He's then done a bit of a comparison looking at how much of the overall float Webull hold of some of these blue chip stocks. So as an example, on the Web API, there's 47 million shares of Apple held on Webull. That represents 0.28% of the shares outstanding, or 0.66% of the retail float when you remove institutional investors. So even though 47 million shares of Apple sounds like a lot, actually it's only 0.28% of the shares outstanding, which is fairly reasonable for Webull, a fairly large investing platform or a fairly large broker or a broker platform, to hold only 0.28% of the shares. Obviously, most of the Apple shares are going to be held by large funds and institutions. Many are also going to be held by Robinhood, TD Ameritrade, Interactive Brokers, and many more. He's then done that same review for Coca-Cola, Johnson & Johnson, Microsoft, Walt Disney, JP Morgan, AT&T, and many, many more as well. The largest so far is Tesla, where Webull hold 29.6 million shares of Tesla, which is around 2.96% of the shares outstanding. Now that sounds like a very reasonable amount of shares that are held by Webull. Totaling the value of all of these shares brings Webull to around $472 billion worth of assets under management. But it gets really interesting when you start looking at meme stocks like AMC and GameStop, and this is where the synthetic shares are going to be exposed. So according to the Web API, there's 4 million shares of GameStop held on Webull. That represents 5.23% of the shares outstanding, or 12.4% of the retail flow. But with AMC, there's 128.4 million shares of AMC held on Webull alone. That represents 24.99% of the shares outstanding, or 43% of the retail flow. So that's 43% of the legal float held on Webull. That's not including Fidelity, that's not including TD Ameritrade, that's not including Moomoo, that's not including Interactive Brokers, or many, many other platforms. And therefore there is a chance that Webull is publicly stating the number of shares for each security via one of their public web APIs. There is no chance under regular circumstances that 12.4% of GameStop or 43% of AMC would be held on one single brokerage, especially due to the mass exodus of people away from brokerages like Webull and Robinhood that use and receive payment for order flow. So many people transferred their shares from Robinhood and Webull over to Fidelity that it's likely that Fidelity holds even more shares in AMC than Webull do. If Webull are still holding 128 million shares of AMC, I imagine that Robinhood are maybe holding still 200 to 300 million shares of AMC. I imagine Fidelity on top of that are probably holding another 500 million or maybe 600 million. On top of that, you've probably got TD Ameritrade that's still holding another 200 million, and all of these other brokers that are still probably holding many more shares as well. Obviously, if Webull are holding 100 million, Robinhood are holding 200 million, Fidelity's holding 500 million, Interactive Brokers and TD Ameritrade are both holding another 100 million each, all of a sudden that's going to add up to 1 billion, maybe 2 billion total AMC shares, meaning that there's tons and tons of synthetics. And if that is true, apes have been right all year about synthetic shares and naked shorts. Now, similarly on this line, exposing naked shorts is actually much easier than we even imagined. The SEC won't expose it because they don't want to be responsible for a market crash. The mother of all short squeezes is inevitable. We hold until all of those criminals are put behind bars. This poster says what really bothers me is that I'm pretty sure doing an internal poll to determine the number of shares a certain stock has under a brokerage literally takes minutes. So why aren't they doing it? It'd be very, very easy for the SEC to go to these brokerages and say, Webull, how many shares of AMC are you holding? Robinhood, how many shares of AMC are you holding? Fidelity, how many shares of AMC are you guys holding? It literally takes one idiot with a piece of paper and a pen to write down how many shares each brokerage is holding, total up at the bottom, and then you've got how many shares are in existence. Considering the SEC are literally the market regulators, it's not out of their jurisdiction to ask Webull how many shares of a stock they're holding in their platform. So if payment for order flow brokerages like Webull holds 43% of the float of AMC, then Fidelity alone can surely have already multiple times the retail flow. If that's the case, believe it or not, Fidelity knows about it. However, for some reason, maybe legal issues, they cannot speak about it or post about it. The fact that they haven't already done this tells me one thing. We are right, and there are billions of synthetic shares out there right now. Confirming it could cause a run on the market and crash the market because tons and tons of other institutions would start going long on AMC in a massive way in order to squeeze those shorts. And that's probably why the SEC ultimately won't do it, because they don't want to crash the market. But they can't hide it forever. The ticking time bomb will go off one day. The entire market and the shorts will be screwed. Now, I do think this is the case because Unusual Whales has just tweeted some breaking news. JP Morgan offers hedge funds a product to protect them from losses related to meme stocks that are rallied by retail investors. We are winning. If the shorts weren't worried about shorting AMC, and if they weren't worried about us apes, and if we weren't winning, then JP Morgan wouldn't be offering them some kind of insurance or some kind of a product to protect them from those losses. And it also shows that those hedge funds and institutions know that AMC is going to squeeze and that it is going to run up again. Otherwise, they wouldn't be buying these products from JP Morgan. I think what JP Morgan is offering is some kind of credit default swap for a squeeze. If AMC and GameStop squeeze, then these hedge funds that are shorting AMC get some kind of payout or insurance money. Now, I want to talk about Aron's recent tweet basically denying the possibility of a single NFT for every single share in issue. Aron says NFTs are a superb idea, but not one NFT per share security token NFT dividend, as repeatedly described on Twitter. It's likely illegal, breaches our debt covenants, and or exposes AMC to huge litigation risk. We can't do it. Beware of concepts that sound too easy and too good to be true. Now, Mark Hodes did jump in and said, Adam, as I've described this, it's not illegal, and when you say litigation risk, that's just an excuse. You're the CEO, it's your show to run, and you can run it as you wish. Now, AMC Tutor on Twitter has done an excellent explanation of his thoughts on why Aron does not want to go ahead with this plan. He says, for those of you promoting an STO for AMC stock, it is a potentially good idea on its merits, but you need to read Aron's statement more carefully. Aron says an STO would open AMC up to a lot more legal scrutiny. This is true. It does not matter at this juncture whether it's based on share count or not. They'd face so many lawsuits from so many funds, short sellers, institutions, and basically everyone else. You folks are saying that, well, AMC would win those lawsuits easily. No, that's not necessarily true. Everyone knows how much hubbub there is around AMC. A talented and well-funded legal team would completely swamp AMC with discovery requests and various motions to drag out the legal process, causing AMC lots of money, distracting Aron away from his business, and it would cause AMC to struggle to grow as a company into the future. It wouldn't just be one fund, it'd be wave after wave after wave. Yes, Overstock did beat those funds that were trying to sue Overstock, but at the time, nobody really knew about Overstock and nobody really cared in the same way that they do about AMC. So maybe AMC could issue an STO in the future when it has a genuine business purpose to do it, when it's out of their debt situation, and when it carries less of a litigation risk. But right now is not the time, especially with all the tweets on Twitter. A legal team will just tear through all of those tweets and try and argue collusion with the investors. But obviously I don't think that an AMC NFT dividend is the only way to cause the AMC squeeze. As I've said many times before, I do think that when the market crashes and these hedge funds get liquidated, they'll be forced to cover their short positions, causing the AMC squeeze. Now, in line with this, the Shanghai Stock Exchange just announced that Evergrande officially defaulted to pay the principal and interest of a financial product due on November 29th. Now, mainstream media like CNN and Bloomberg is also finally admitting this as well. Last month, Bloomberg said that Evergrande paid all of these bonds on time, but now they've changed their mind and said that Evergrande has defaulted on its debt, as reported by Fitch Ratings. Now, the credit ratings agency on Thursday downgraded the company and its subsidiaries to restricted default, meaning that the firm has failed to meet its financial obligations. Now, we'll talk in a second about what this really means. Fitch said the downgrade reflects the company's inability to pay interest due earlier this week on $2 denominated bonds. The payments were due a month ago and the grace period lapsed on Monday. Now, it's interesting that Bloomberg is changing its mind. I thought these bonds had been paid on time last month, but now Bloomberg is agreeing that Evergrande never made these payments and has in fact defaulted, like I told you the other week. Now, Evergrande's default means that all of those short hedge funds who use their bonds as collateral are basically screwed. Now, that basically means that all of the collateral they had, all of the collateral that they posted to meet those margin calls over the last few weeks has basically just evaporated, and they now don't have that collateral anymore. I'll speak in my video tomorrow about who holds these bonds and who has been using these bonds to meet margin calls and to post collateral. But for now, guys, be sure to let me know down in the comments below what you think about the Webull Web API exposing that Webull holds 43% of the AMC flow. And guys, if you want to stay up to date with all of my latest stock and crypto picks, or if you just want some help with AMC and GameStop, be sure to check out the Patreon and the private Discord, linked in the description below, and become part of the team. And as always, guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.